If you're uncertain whether your retirement plan is in compliance with your plan documents or relevant laws, I highly suggest that you reach out to a trusted advisor and seek some clarity. Don't wait for your auditors to find the issues, own your compliance process.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hantzmon Wiebel. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. Today, we are joined again by Quinton Knott, a manager in our auditing and accounting department. Thanks for joining us again, Quinton.
Thanks for having me.
So today we are going to talk about employee benefit plans.
Yeah, so in our audit department, one of the big things we do is audit employee benefit plans. So these are retirement plans that are sponsored by employers, and retirement plans can either be one of the biggest assets for an employer, for employee retention and things like that, or it can be one of the biggest liabilities if the retirement plan falls out of compliance.
So today we were going to talk about common pitfalls in retirement plans. So what can go wrong?
To set the stage a little bit, while your retirement plan may not be subject to the audit requirement, all of these errors are still applicable to any employer-sponsored retirement plan. Even if you are not subject to a retirement plan audit, you're still subject to stay into compliance with the Department of Labor and the IRS. So the first kind of bucket of common errors has to do with your plan documents, and specifically misunderstanding your plan documents. And one way that many employers misunderstand their plan documents relates to the eligibility of their employees. Now, many companies have several different types of employees or different divisions possibly, and their plan might have different rules of eligibility in their retirement plan for different employees. And what can often go wrong is that while they have rules that are set in place to benefit certain employees, they might not be followed properly due to either the employer not understanding what they have set out in their plan document, or perhaps due to the payroll processes that they have in place not being set up to track the eligibility properly. So an example of something that can go wrong is an employer has a 90-day waiting period for new employees to enter their 401k plan, and perhaps they don't have a very savvy way of tracking when employees hit the 90 days, so an employee might reach their eligible mark but not be given the opportunity to enter their 401k plan until it gets caught much later. So then they would have missed out on employee deferrals and employer match, and it can become a really big problem really quickly.
And then the earnings, right?
And the earnings, right, yeah. And then the next common error in 401k plans, and this is a big one, it has to do with the definition of eligible compensation. So, when you think about your paycheck, it might be made up of several earnings time codes, and then taxes get taken out, and then other deductions get taken out like health insurance or other 125 deductions. Each plan has a very specific definition of compensation, of what compensation for each employee is eligible to be deferred on into the 401k plan. So, for example, you may have certain types of bonuses that get paid out each year, and your plan document may specifically say these can or cannot be considered eligible compensation for 401k purposes. So another common error that we find that relates to a misunderstanding of plan documents has to do with an inadequate understanding of an employer's relationship with their third-party administrator or their record keeper. So while they might think that their third-party administrator is the primary fiduciary for their 401k plan and is going to be checking behind and making sure everything is working properly, in reality, legally, most of the time, the employer is the primary fiduciary. So while the employer may be relying on the record keeper to periodically review the 401k plan and make sure all funds have been put in the right place, it actually is the responsibility of the employer to be checking and making sure that they are following their legal document, which is their plan documents.
So really understanding the plan document and those key definitions is of most importance.
Absolutely. And if I was going to add one practice that every employer with an employer-sponsored retirement plan could add to their periodic checklist, it would be to, one, make sure you have all of your relevant plan documents on hand, the most up-to-date versions, and then two, to actually read them and make sure your payroll and HR processes are following the nuances of your plan documents.
What other categories of errors do you find that are common?
Yeah, so maybe a second category of errors that we often see are more internal, specifically internal controls or processes on the employer side that are maybe weak or don't cover all the bases that they need to. At the beginning of each audit, one of the first documents we look at is an employer's census. And this is a document that houses all of an employer's employee names and all of their demographic data and a lot of their payroll information as well for the year under audit. And it's really important that an employer has processes in place to ensure that their census data, which is the overall summary of all of their payroll data and HR data, that this is going to be accurate, as the demographic data in this document is going to be critical for ensuring that their retirement plan is compliant with the plan documents that they've signed. And similarly, if an employee's payroll information is not accurate on the payroll side, then it's obviously going to affect not only their employee deferrals into the plan, but the corresponding match. So my thinking here is the old saying, garbage in and garbage out. You know, if the information that you are entering into payroll is not accurate, it's going to affect not only your census document, but probably a lot of the other underpinning information that feeds into your 401k plan.
Do you have another example where weak internal controls could lead to errors?
Absolutely. So possibly the number one error that the Department of Labor finds when they conduct their formal audits has to do with inconsistent or late remittance of employee funds into an employer's 401k plan. So what I mean by this is when an employee is paid and they receive their money, soon after that the employer also sends their portion of their 401k contribution off to their record keeper or TPA or whoever is the custodian of their retirement plan. And the Department of Labor is very strict about how quickly this remittance needs to happen. And if an employer does not have a very clear remittance policy that is in line with the Department of Labor, or if they have a policy but they're not following it, you know, they say we will remit funds 1 to 3 days after our payroll run, but they are consistently remitting funds later, like 5 or 7 days, this is possibly one of the biggest errors that doesn't seem like a big deal, but can end up costing an employer a lot of money.
What are some proactive steps that plan sponsors can take to stay compliant and audit ready?
I'll say this again because it's so important. One, a plan sponsor wants to make sure that they have their relevant plan documents on file, the most up-to-date versions. They want to make sure they know what those plan documents say. The second recommendation I would have is any payroll or HR processes that relate to a 401k plan, they want to make sure they have these clearly documented in writing and that every person that is part of the payroll process knows what those processes are and is following them. The next thing I would suggest is that if an employer's TPA offers any sort of training in regards to fiduciary responsibility, an employer should consider having their plan trustees sit in on those trainings, possibly annually, because laws change often and sometimes laws can change in a way that a plan document may need to be amended in order to stay in compliance with updated laws. And my last suggestion to employers with retirement plans would be to not wait until an issue is found under audit, either from your independent auditor or from the Department of Labor or IRS. Rather, if you're uncertain whether you're following your plan documents, I highly suggest that you reach out to a trusted advisor and find an answer to your question, seek clarity, and make sure your plan is in compliance with your plan documents and with the relevant laws. If you're uncertain whether your retirement plan is in compliance with your plan documents or relevant laws, I highly suggest that you reach out to a trusted advisor and seek some clarity. Don't wait for your auditors to find the issues, own your compliance process.
Thank you so much for your time today, Quinton, and for sharing some of these common errors in retirement plans.
Absolutely. So what's the next topic?
Well, it depends.